Today we will be looking at a 30-minute day trading strategy. Who am I? I am DP Roberts, and for years I've been testing hundreds of strategies and indicators, and I'm testing more every single day. I've compiled all that information into spreadsheets and used it to create a profitable trading strategy with a custom indicator. And we have an amazing community over on Discord where we help you become a profitable trader. If you are interested in getting access to the spreadsheets of all the indicators and strategies that we have tested, as well as a free trial to our custom indicator, you can just sign up for our Patreon down below. Alright, as I said, today we will be looking at a 30-minute day trading strategy. Before we do though, I wanted to put the testing scoreboard up for everyone to see. So to date, we have tested a total of 299 strategies, with 92 of them being winners. The best one so far was able to achieve an 87% win rate. That was achieved using the Academy of Forex indicator. And so far, since we've been keeping track, it has outperformed 193 of the other strategies that we have put it up against, every single one so far. We've also tested a total of 1,011 indicators, with 422 of them being winners. Alright, as I said, today we will be looking at a 30-minute day trading strategy. So this will kind of be a recap and an update of the Academy of Forex strategy. Even if you have the strategy and have been using the strategy, go ahead and watch this video through as well, so that way you have an update on any of the changes or anything that has been modified to this point. Alright, so what we have on screen is the Academy of Forex indicator. As you can see here on the bottom, it's set up the way I set up the Academy of Forex indicator. And then we have the ATR candle tracking indicator on the top side here, which is also free when you get access to the Academy of Forex indicator. And the ATR candle tracking has now been updated with the ATR bands that we use in the new rules. And of course, all these rules are laid out in detail in the new video that I have put out on the Discord channel, the Discord server, under the Academy of Forex indicator discussion channel specifically. And another new thing while I'm here is Jay, our admin, is now a licensed long-term investment advisor, and he is giving information here in the Discord server for anyone who is looking at wealth building and long-term investing strategies. And of course, we have created a channel just for the patrons to also have some in-depth, more detailed information from Jay about long-term investing and wealth building. So go ahead and take a look at that as well. Another advantage to becoming a patron of the channel. Alright, so let's go ahead and go over the strategy real quick. So first of all, we have the Academy of Forex indicator down here, and then of course we have the ATR candle tracking indicator here at the top. And so these are the only two indicators that you will need for this strategy. So now, according to our rules, what we are looking first and foremost is we are looking for the MR line, this line right here. That's just kind of moving throughout the indicator. This is the MR line. We're looking for it to move either into an overbought or an oversold position. And you can see that it moves into the overbought position right here. When it does that, we're now looking for a sell tag, a sell signal. The first sell tag to appear is what we're looking for. When we get a sell tag like this one right here, what we are going to do is, I'll go ahead and just delete that trade setup. So we're going to take a short position, and what we're going to do is we're going to set a order right here to be triggered. Let me just go ahead and delete that green line. I'm going to set an order to be triggered at this lower red line right here. We're then going to put our stop up here at this thin upper purple line right there. And once we have the order, entry order, and the stop set in place there, what we're going to do is adjust our take profit to a 0.5 like this right here. So basically we have a 2-to-1 risk reward. And we'll go over the numbers on this here in a moment to show you how this is still a very profitable strategy. And so once we do that, we then set the order and we leave it and we let it just go ahead and play out. You can see after a few candles here, we get triggered into the trade, and then it comes down nicely, getting us to our take profit. And that's for a short trade right there. We then look for the MR line to now set up again. And this is a new setup, so we look for the MR line to either break to the upside, the overbought, or the oversold. In this case, it goes oversold right here. Now we're looking for the first buy tag, this green tag right here with a B. That's going to be the first buy tag, and that's going to be our buy order or our long setup. So what I'm going to do is just go ahead and delete that green line again. So we'll pull up a order here. What we're going to do is we're going to set an order to be triggered on this green line right here, the green upper line. We're then going to set our stop right here at the peak. This is the most recent pivot, this small peak right here, and this is the lower thin purple line right there. And then what we're going to do is just go ahead and adjust our take profit to a 0.5. So it'll be right about there will be good. When I say 0.5, it's this right here, risk reward ratio, 0.5. And in this case, it's 0.51, and that's okay. Just get it as close as you can to that 0.5. If you zoom them a little bit tighter, you can actually get it to the 0.5 like that. And then you're going to set the order and just leave it and let it play out. And you can see in this case, again, here after a few candles, price comes up, triggers us into the order, then kind of consolidates, pushes up, and gets us to our take profit once again right here. Okay, so let's just go ahead and go over the numbers on the strategy real quick. Then we'll take a look at an alternative stop method and the numbers on that one. So the initial strategy right here, we did the 50 trade test. Out of those 50 trades, we got 40 winning trades, and we got 10 losing trades. It's going to put us at an 80% win rate. Now, with the 2-to-1 risk reward, if you're looking to gain $600 per winning trade, your total gain would have been $24,000. On the losing side, you would have lost $12,000 for an overall gain of $12,000 altogether. So not bad at all. Now let's go ahead and take a look at an alternative stop and see how you can actually kind of supercharge your earnings by letting the trades play out a little bit more and getting some more profit out of them. So let's jump back over to the chart here real quick. So the alternative stop is this. So the original stop is as we have set up right here, or I guess I should say the original take profit instead of a stop. So we're talking about the take profit, not the stop. I'm sorry. It might be a little bit confusing. So the original take profit was the 0.5. So basically a 2-to-1 risk reward. In this case, what we're going to do instead of setting that as a hard take profit, we're going to wait for the MR line to break to the downside or break to the opposite side of the trade. So in this case, it went to the upside here, and we're in a short. We're looking for the MR line to break to the downside this time. And once it breaks to the downside, we're then going to look for the first couple candles to start making a new high. And so if I go ahead and adjust this down right here, these candles right here are the first couple candles to start making a new high. And so now you can see that instead of having a 2-to-1 risk reward where we are risking more than we are gaining, now we actually have a 1 to 1.96, almost a 1-to-2 risk reward in this particular case. And now let's look at this one as well. So again, we're looking for price or for the MR line to break to the upside, since we are taking the opposite of the position. So it broke to the downside here. We took a buy. Now we're looking for the MR line to break to the upside to trigger us out of this order. And in this case right here is when it breaks to the upside, and then we're going to look for the first couple of candles to start making a new low, and that is right in here or possibly right in here, depending on how tight you would have had this set up. So let's go ahead and squeeze this over, and let's go ahead and pull this up to about there. All right, so before we had the 2-to-1 risk reward, and in this case now we have a 1 to 4.5 risk reward. So you can see how it drastically increased your take profit. And so in this case, the total pips gained would have been 144 pips gained, compared to way down here we would have been at a 16 pip gain. So you can see how that really supercharges your earning potential using this take profit method. So let's go ahead and jump back over to the numbers, and let's go ahead and go over the numbers on this. So the original, using the original take profit, we did 75 trades, and you'll see why here in just a moment that I did 75 instead of the 50. So we did 75, and out of those 75 trades, we got 58 winning trades and 17 losing trades. That's going to put it at a 77% win rate. And so if we're looking to gain that same $600 and risking that 2-to-1 risk reward, in this case, our total gain would have been $14,400, and the total pips gain would have been 1,655. Now, using this method is going to lower the number of trades you take, the alternative take profit. That should be take profit and not stop, so that's not confusing anyone. And so in this case, you would have missed some of these trades because you would have already been in these trades waiting for them to play out completely and take your profit with this alternative take profit method. And so it would have lowered the number of trades from 75 to 47. And out of those 47 trades, we got 30 winning trades and 17 winning trades. And again, that's going to lower your win rate to 63 instead of the 77. But the difference is now the total gain, looking at the pips gained, went from 1,655 to 3,025. If you were to divide the total gain, would have been this one right here, across these number of pips, and then added those over here on this side, your total gain now would have been 39,355. So you can see it went from 14,400 to 39,355 would have been your gain using this alternative take profit method. And again, all this is outlined in the Academy of Forex Indicator Guide video that I just showed you a moment ago. So anybody who gets access to the indicator will have all these rules, including the actual guide itself right here in text form, as well as the video guide if you prefer video rather than text. Then lastly, let's just go ahead and look at some long-term numbers using this strategy. So this is using the first take profit method. And on the first take profit method, we have been tracking this strategy for 31 weeks now, and over 248 trades. The total gain would have been $49,090. And each week I break down these numbers, the specific pairs we're using it on, and the crypto coin, and so on. You can see more stats on the strategy here, but more importantly, you can see the growth of the equity there. So really great stuff using the Academy of Forex Indicator. If you are interested in getting access to the Academy of Forex Indicator, you can get a free trial when you sign up for a Patreon down below. Once the free trial is over, it's only $15 a month to maintain access to the indicator. You do have to maintain your Patreon status, but it's still super cheap for a profitable, efficient trading system. All right, that's it for this strategy here. We'll go ahead and move on to the next video from here.